Opportunity is always found where nobody is looking. If we are actually in a bull market now, if 2026 is going to be bullish, maybe the rally is not in Zcash, maybe the rally is not in Ethereum, maybe it is in Bitcoin Cash. Let's have a look at some data most people are not considering. Now what we see over here, that's the Bitcoin Cash price relative to the regular Bitcoin. And from the peak in 2017 to the bottom at the beginning of last year, we have seen underperformance of almost 99%. But it appears as if in the last 3 to 4 years, we might be trading in a range. At least it's quite clear that the underperformance is slowing down. Are we potentially breaking this resistance? We're trying to answer this in this video. Now, one potential reason why Bitcoin Cash is not underperforming Bitcoin anymore is because the market makers might have already sold off their holdings and the inflation rate is the same as for Bitcoin. We've got 0.85% per annum of additional supply that hits the market, both for Bitcoin but also for Bitcoin Cash. And of course, those tokenomics will improve over time. We've got another halving in the middle of 2028. Check this out. This is Bitcoin Cash relative to the altcoin market cap. So how is Bitcoin Cash doing relative to other alts? It looks like we have higher lows now. Bitcoin Cash is among the better performers within the altcoin market. Where does it come from? I think it's token inflation. Have a look at the new tokens that hit the market every week. And that's just the listed tokens on Tokenomics.ai. It's roughly 750 million, sometimes even more than that. That's additional supply that hits the market. And if that supply doesn't get bought up by new demand, then of course many altcoins go down. Bitcoin has a weekly inflation rate of 295 million. So the altcoins on average have 2.5 times the inflation of Bitcoin. Add on top of that the market cap of Bitcoin is roughly 8 times the market cap of the smaller alts. So we don't just have 2.5 times the inflation relative to the market cap, we've got 21 times the inflation. Since Bitcoin's inflation rate is around 0.83% or so, an average altcoin has an annual supply expansion of 17.7%. 17.7% versus 0.83% for Bitcoin or Bitcoin Cash. And so long term, I think there's a very good chance that Bitcoin Cash within the altcoin market will outperform, simply because it's not as inflationary. A project needs to see a lot of growth, a lot of hype to counterbalance a 17 to 18% per annum inflation rate. So it's no surprise that Bitcoin Cash here in green and the original Bitcoin here in orange tend to move in the same direction at the same time. There is correlation. Currently though, Bitcoin Cash is comparatively expensive. Again, something we've already seen in the relative valuation chart, Bitcoin Cash relative to Bitcoin. Now, where do those discrepancies come from? Why do we sometimes see BCH rallying to then subsequently crash back down again to then on average get the Bitcoin return? I don't think that this is long-term holders buying and selling Bitcoin Cash that aggressively. I think this is short-term manipulation through leverage, through the perpetual futures. So you might be aware of the 10th of October. This is where many altcoins crashed and where the long side, so the people that were betting on rising prices, tended to get liquidated. That was also true for Bitcoin Cash. The average altcoin on that day fell by almost 50%. And then many market makers and many automated trading bots bought up for those lower prices and then over the next days sold off their holdings. And so the funding rate for Bitcoin Cash has massively changed since the 10th of October. It tended to be very positive in the past. Now it tends to be rather negative. The funding rate for Bitcoin though is always positive. So there is long-term holders of Bitcoin, there is long-term positive sentiment around Bitcoin. There's clearly a mismatch between Bitcoin holders and Bitcoin Cash holders on the perpetual futures market. Now, if we work with the assumption that long-term, the two assets are likely going to move in tandem because of the same tokenomics, then there is potential arbitrage to be made here, right? We could go long Bitcoin Cash, we could go short Bitcoin. So we get the funding rate from all the longs in Bitcoin, we get the funding rate from all the shorts in Bitcoin Cash, and over time we're just making money with the funding. Again, if there's no divergence long-term between the two assets. Now, this is all long-term. short term, I don't think it's the best strategy. And here is why. The open interest on Bitcoin Cash is at historical highs. So the amounts of bets that are being made on Bitcoin Cash are as high as they've ever been. And that's bad because the bets on a price, the open interest, and the spot price itself, they are highly correlated. When there's more bets, then the spot price tends to go up. When there's less bets, the spot price tends to go down. So if now less people bet on Bitcoin Cash, the open interest goes down, very likely we will see the price deflate as well. And that's the big risk. This interest rate arbitrage might make sense long term if you're doing this over the next 3, 4, 5 years. But in the short term, I don't like it because there's just too much speculation on Bitcoin Cash. And as we've already noted at the beginning of this video, Bitcoin Cash relative to Bitcoin, at least right now, is not necessarily that cheap. We could potentially fall by another 50% relative to Bitcoin from here. Nobody has a crystal ball, but I'd feel more comfortable buying at those lower levels than buying right now, or potentially even then opening that interest rate arbitrage bet. Long BCH, short Bitcoin. So you wouldn't just make money with the interest rate arbitrage, we would also make money with the potential appreciation. Now, if everything that I've explained in the last 2 to 3 minutes was a bit too complex because it included derivatives and funding rates, etc., and you're not yet that advanced in crypto, then feel free to check out the premium membership. This is where I share my own trades. This is where we make trades that are independent of market movements, where we actually generate returns independent of whether or not we're going up or down. If you got value out of this video, feel free to subscribe. I publish videos regularly. See you next time on YouTube or see you in premium. Cheers.